Thanks for checking out another clip of the Cashflow Contractor. We'd love to have you as a part of our audience. Click subscribe wherever you get your podcast. So, Lisa, we've talked about COGS. We've talked about knowing the cost of your project, having the adequate deposits, but let's talk about overhead a little bit. What are the challenges with overhead? How we manage our overhead a little bit better for cash purposes?
Yes, yes. So in terms of knowing your overhead, the importance of that is so that when you bid a project, you can also make sure that you have enough profit at the end to cover your overhead. Um, and then in terms of overhead and managing it is just evaluating like what you're spending your money on. One of the things we were talking about is subscriptions and technology. And, a lot of times those apps that we use, they increase their price every year, and just kind of evaluating and making sure the apps you're using, you're getting the most benefit from. Because it's really easy to have those creep up and it just increases your overhead and you're spending more than you're getting the benefit from on those at times.
Yeah. So really quick, we'll come back to subscriptions, but as far as allocating overhead to gross margins, which is
Yes.
Martin's favorite subject, we won't get into the details of how many discussions we've had about this, but how practically, how can someone do that? What is the best practice that you're showing people?
Yes, yes. So, it's first just to know what your below the line overhead, like what your expenses are to run the company. And if let's say it's 20%, when you bid a project and you were saying that you're going to have, you've got your sales price and then you've got all of the goods that go into it, you've got your labor, and you're looking at having, a 30% profit margin, as you need to know that at the end, you're going to be left with 10% profit because you're going to take that 30% profit margin from that project, and then you've got your overhead of 20% that is going to need to be covered. And just knowing what your overhead numbers are so that when you bid those jobs that you are making sure you have enough profit from each job to cover your overhead.
Yeah. I think a lot of people have that realization where they end the year, net profits 4%. And they're like, what happened? I was 50% gross margin. I've had that conversation with people, and it's that overhead. Um,
Yes.
and Martin, we've talked about this before, but you're all about see if you can avoid adding overhead at all costs.
Right. I'm working on this with two clients right now. It's our main focus is getting overhead down. And when you first look at it, people always say, "Well, I need everything." Really, the time to control overhead is when you're bringing expenses on, hiring
Yeah.
people, or just don't do it, because it's a lot easier to not do it than it is to get rid of it. But there are people. I mean, when you spend the time and it doesn't even occur to you immediately, or to me anyway. But when you spend the time, things start going, hey, my copy machines cost $250 more each month than my buddies, right? Well, anyway, you just start finding things. Insurance. I've got great insurance friends, but so you got to look at insurance because it multiplies on you. And one of my favorites, well, it's not my favorite, but it kind of is. People have people working for them who are kind of legacy employees, have been around a long time, kind of don't really know what they do. They help out a little bit, but it costs, let's just say, 50,000, which is not a lot of money. I mean, that's not a high salary. And that person leaves. They don't want to let them go, but that person leaves, and then they tell me, I got to bring them back. I go, no, we're going to go 3 months minimum because you just added 50,000 to your bottom line if you're above break even, right? So, but overhead's tough to get down. So don't get it up in the first place.
You mentioned legacy employees, but honestly, the same can kind of go for legacy clients. Obviously, I know that in construction,
Definitely.
you're doing projects,
absolutely.
but sometimes you have the legacy builder that you work with and you give him a deal and he's used to a certain price and you're scared to raise the price on him and all this stuff. And that can really shoot you in the foot too.
Yeah, no, great point.
Yeah. So
100%.
So back to the subscriptions that you mentioned. I literally just went through this, looked at year-end financials and looked at all my expenses. I literally have the spreadsheet like in the next tab over, but I think I'm going to end up reducing it by, close to $800 a month just on subscriptions.
Really?
And subscription is probably not the right term. Recurring expenses. One of them is my cell phone line. I was paying for this, plan that automatic upgrades, all this stuff, but I haven't upgraded my phone in like 4 years and I'm fine with it. But I was paying like $40 a month for that. Well, I dropped it, right? I was paying for it. I have 2 different iPads, one for me that I use for work. I need the data on it. I have one for my daughter. I don't need the data. Maybe when we fly to Morocco next time, but I'll just add it whenever that comes up.
Yeah.
Well, there's $25 a month. A big one that I think is really frustrating to me, but I'm the owner of the business. I buy software that really my employee is going to use. I'm not the one I need to maybe access it, but I don't need to use it. Well, because I'm the owner, I have to have a paid seat, but then I've got to have a paid seat for them. So now I'm just like, okay, we're going to change from like me being the owner to our info email being the owner. The employee logs into that, and then I can be able to access it, but I'm not using. I need to access the billing. I need to make sure it works. If they leave, I need to access it. And so that saves me a seat. Well, I've done that on 3 different softwares that accumulate to probably $120. And so it just adds up over time. And those are the things that if you're not paying attention to, you're absolutely going to have really high subscriptions. So
the other thing I've noticed is that a lot of times companies will start and then they start adding features. And so I've been able to use features that are already in some of the subscriptions I already pay for and then get rid of ancillary ones. So just because our CRM that we're using keeps adding services. So we're able to kind of save some that way. It's just to take advantage of all of the services offered by the subscriptions that you're using instead of having singular ones for each thing you need to do.
I think we did that, Martin, for you, and I did it for me at least. I was paying for Zoom, but I was paying for Google Workspace. And Google Meet has improved vastly since when I first joined Google Workspace.
I'm still paying for Zoom so I can get rid of it, right?
Yeah, you can. Let's cut your overhead, Martin.
Yeah. Well, I mean, no, I report. Oh, no, we don't need to go. Something that you're talking about, when you're talking about subscriptions, I know there are people out there going, "Ooh, $800 a month means something," but other guys going, so I save $10, $14. No. What we talk about all the time, one of my favorite statistics is if you can get your gross profit margin up by 1%, the average company will get their net profit up 14.5%. Okay. Well, how many subscriptions do you need to drop to save 1%? It's always little things. Now, anyway, you're not going to do all the math on that, but it's little things. Very seldom are there big things.
Thanks for checking out a clip from the Cashflow Contractor. We have full episodes where we go deep on topics that help you grow a construction business that runs without you so you can have less stress, more time, more money. Now, we've got other videos, other clips, but if you want to check out the full episode for this clip, you can click wherever our editor put it. It might be here, it might be there, it might be over my face, I don't know. But thank you for checking us out. We'd love to have you as a part of our audience. So subscribe or check out a full episode wherever you get podcasts.